Good morning and welcome to another week of Subject to Finance on Monday the 2nd of October, another month. We are getting closer to that election date, and I'm continuing my discussions today on what we can expect to see around home ownership and home affordability when it comes to the policies of the right bloc today. So looking at National and Act, I'm not looking at New Zealand first because they have kind of indicated some things which are kind of interesting and a little bit rightish, I guess you'd say, but they don't have a policy, and it's a bit hard to kind of give you more when they don't have one. So today we'll look at National. Obviously National's theme this election is tax relief and focused heavily on the middle income demographic, if you like. But there's some things that they are doing, I guess, this election in the home ownership and home investment space, if you like, that really just sort of roll back the clock a little bit on some of the things that Labor has done over the last 6 years. So key things for them to revert the bright line test to 2 years from July 2024. So that started, I think, from memory at 2 years with Labor and crept out to 6, and it's coming under National, it's coming back to 2. And the big one, which is a big one for investors and something that investors will be banking on if they're expecting National to get in this month, is that they're going to reinstate the ability to deduct, for interest to be deducted from net income on rental properties. That's a big one for them. I think it's going to definitely drive some activity in terms of investors, and it does have potential to see the market sort of pick up a bit post-election in that space. It would be gradually phased in, 50% from April 2024, increasing to 75% from April 2025, and then it would go to the full deductibility again of 100% in April 2026. So that's kind of their big one. They're going to reintroduce the non-cause termination piece again, which would allow landlords to evict tenants for no reason as long as there was 90-day notice. This has been a big one for investors as well, and I think it will probably be seen as a real positive from the investor side of things. Obviously, it was brought in as a social mandate more to protect the tenants, and so I guess you could say that looking at this, National slightly less tenant orientated and more landlord orientated. They're looking at doing similar sort of things to what Labor are doing around infrastructure and consenting and other bits and pieces with councils, but they're looking at rewarding in a different way, and I think one of their big focuses is on more of a performance-based reward system. So they propose to have a performance-based fund called Build for Growth, and it will look at basically awarding councils that outperform the previous 5-year average in terms of new building consents. In doing that, councils will receive additional funding for outperformance, if you like. So for every outperformance, and I guess that's at a consent level, councils will get $25,000 from central government. And National say in their policy that if this had been implemented last year, Auckland would have received around about 152 million extra. So it's sort of substantial money, and it could make a difference. So how are they going to fund it? They are going to basically end other schemes that exist, the Affordable Housing Fund, Buying Off Plan, Kiwi Build Fund, Kaingaora Land Program, the Housing Accreditation Fund, and by getting rid of those 3 current schemes, if you like, they estimate that that will free up around about $1 billion to go towards this. The other sort of thing that is kind of significant when it comes to housing is the infrastructural piece, as I mentioned earlier. And National have a transport program to invest into infrastructure projects across the country with a focus on reducing congestion and providing more low emission options and unlocking housing growth. So they are focused on that roading in relation to new housing. They have a few ways of doing this. They have the roads of national significance, which is about increasing the 4 major expressways that connect Whangarei, Auckland, Hamilton and Tauranga, so Golden Triangle, improving the motorway system within that essentially. Better public transport, a rapid transport network for Auckland with public transport corridors in the northwest, Auckland to Botany and the Eastern Busway. So, and they're also looking at improving Lower North Island's rail system. Rebuilding the regions and improving resilience. They are also looking at more of a fix-up job in the rest of the country around things like the flooding and cyclone effects, where damage has been seen in terms of the roading in those areas. So I guess the high density areas are going to see the funding in this respect. The other areas, the priority will be around fixing the problems that have been created from weather issues in the last year or two. So that's really national. I would say their flagship things are the rollback effect that they're putting in place around some of those things that have happened with the Bright Line test and interest deductibility. They're the standout two for the National Party. So moving on to ACT. ACT's big thing is replacing the Building Act with compulsory building insurance. They are looking at a different way of attacking basically the problem with the monopoly of material supplies and unnecessary material shortages. The party believes that a less regulated approach is needed that still disincentivises builders from using poor quality materials. They want to introduce a compulsory 30-year building insurance, and this would require builders to purchase insurance for all new dwellings. Insurance companies would choose not to give cover to a builder if they use risky materials. So it's sort of putting the emphasis back onto the building companies to use good materials, and the regulator becomes the insurance company providing that insurance. And in theory, what they're saying is that if the building company can't get their 30-year insurance, then because the insurance company won't provide it, then there's good reason for that, and that will make it difficult for the building company to sell on that product, and for the likes of banks to lend on it, etc. I guess that's kind of how it works. So it's a kind of interesting one. I really don't quite see how it's going to work. Insurance companies would have to, there'd be a fair bit of cost in there for insurance companies to absorb, and how they would do that, I'm not quite sure. But that's their number one sort of thing, their insurance on building. They're going to abolish the progressive home ownership scheme and the first home grant. So that winds back a couple of things that were put in place under Labor, and actually things that as a mortgage broker we've seen sort of working. They want to get rid of those. They want to abolish the Bright Line test, which is similar to National. We don't have a timing in place in their policy. They just say they're going to get rid of it. So I assume that's kind of more of an instant approach than what National's proposing, was sort of staging it out. They want to allow landlords to deduct the cost of mortgage interest from properties they own to reduce tax. So again, that's that sort of deductibility piece that we've talked about that we've seen with National, so very similar to National there as well. And they would put that in place from, I think, reading this fairly much immediately. So really it's get rid of the Building Act, put in place an insurance program that covers building and protects the purchases of those properties, and to abolish a few schemes and implement or reinstate deductibility and remove the Bright Line test. So I think that's kind of ACT. So yeah, not too different to National, with the exception of their insurance type idea. So that's the right block in terms of what we've seen in the policies. As I say, New Zealand First haven't actually put a policy out yet, and so it's a bit hard to know what they're looking at doing. So that's it for me in terms of a wrap-up of the policies for this year's election. I hope you found that useful. Next week I'll be back to talking a little bit more about what's going on at home loan level. A few things we've seen, this is the first, or August was the first month in around about 24 months that we've seen an increase year on year in terms of home loan lending, so a little bit of a tick up there, and I'll talk a little bit more about that next week. Until then, have a great week and we'll talk to you soon. Cheers, bye.